The markets were volatile as altcoins have dropped by 30% throughout the week, but Bitcoin is consolidating around 100k and we are approaching a new year, 2025. What's going to happen and what's next? Today we discussed the calm before the storm. Let's get started. Before we're continuing, it's December, it's almost the end of the year, and that means that we're closing the doors for new entries at the 1st of January for the consultancy. So if you want to be prepared and if you want guidance through the bull and the bear market, make sure to reach out to us through the website that we have in the description beneath, and maybe we're going to help you go through the volatility of the crypto markets. Now, this week was very volatile, and earlier this week we provided an update that was surrounding the crash of the altcoins. We posted that one day later, and then the market's already V-shaped back up. That is something that we need to improve to make sure that the content is provided at the actual moment. I think the info in the video was still suitable for you if you experience new drops, but it's something that we saw in the comments, so we will make sure that our content planning is going to be improved. Now, if you look at Bitcoin and Ethereum over the past week, then we can see that the inflow is still very positive. So the inflow in Bitcoin is at this point 1.6 billion, where Ethereum is slowly pacing up as well, as we've seen more than 900 million of inflow in the Ethereum ETF, signaling that there is not only interest into Bitcoin, but that there is also interest in Ethereum at this point. And that is very good, as we are currently seeing that we had a macroeconomic week. And the macroeconomic week meant that we had CPI, which is the inflation data, and PPI, which is the same data point, but then from the producer's perspective. And CPI is usually the prime indicator of what the Fed is going to do, where PPI is usually telling what CPI is going to do in the coming months. So those are important data points, and CPI was basically a nothing burger. So CPI came out, it was just as expected, where PPI was a surprise. The producer price inflation data was significantly higher than expected by 0.4% on both the core and the regular PPI, signaling that inflation is likely going to remain sticky. And if that is the case, then we are likely not going to have very low interest rates or yields. And that also means that perhaps the Fed is not going to do many rate cuts as a response to the inflationary data. So we've got that particular part. And secondly, we've got the labor market. So on the exact same day as PPI, unemployment claims came out, which were higher than expected. The number was 242k, an increase of close to 10% compared to the previous month, and it was the highest point since the beginning of October. So that would be saying that we're seeing a weaker labor market, and if the labor markets are getting weaker, then we are likely going to see the Fed doing rate cuts because it needs to stimulate the economy in order to keep the labor markets going. And the question is, which one of the two is going to be more important? In my understanding, or in my perspective, I think the labor markets are going to have a significant impact in the markets rather than the inflation. I think that's a relatively old topic. Now, on the other hand, we've also seen that the Great Britain came out with GDP, and that is actually contracting the second month in a row. So the UK might be going into a recessionary period, which might also signal that the US is going to face something in the coming year. Now, CPI had a big impact on the markets. Usually what you see prior to a Fed meeting or prior to CPI data or prior to the unemployment data week is that there are 1 or 2 days of negative price action where the markets are resetting, basically going risk off. And that's also what we've seen at the beginning of this week, where the markets collapsed with a 1.6 billion liquidation taking place as Bitcoin has seen a small correction. But during that period, the altcoins corrected by 20 to sometimes even 30 or 50%, depending on which exchange you are looking at. And that actual crash signaled that the altcoin season indicator has dropped from above 80 to 65. So basically the markets have been resetting and getting itself into a stage of, all right, what's next? What's going to come? And I think it's the calm before the storm, which we're going to be seeing in the charts when I discuss that in a little bit. Now, the Donald Trump Foundation has been a second important indicator, which you've got World Liberty Finance, which is the foundation of Donald Trump. He basically started this to fund his campaign, but that went a little bit different. But it's on-chain, so you can follow what they are doing with the foundation. And they are holding a big stack of Ethereum within the foundation, as you can see. Now, in the previous week, they have been swapping and buying Chainlink and Aave for 1 million each. And they've been doing that through the Cow protocol, which is a swap mechanism. These three coins have seen a magnificent move upwards as Aave has been breaking to almost $400. Chainlink get close to $30 and Cow has done a 10x in a month. So Donald Trump moving into the Ethereum markets is signaling that there is likely way more to come. And that's why I think it is the calm before the storm. So let's discuss the TA and let's discuss the charts. It's funny that you've had Bitcoin going to 100K and then in just a few weeks, it becomes pretty boring that we are just consolidating at this point. That's how fast you get used to new price data. And that's how quick things change in crypto. And if you look at the chart, you can see that Bitcoin has seen substantial corrections taking place in which we had this big liquidity crunch and then a second one, which was a relatively smaller one for Bitcoin. But that caused the actual liquidation crash for the altcoins, which I'll discuss in a little bit. But now what we see on the Bitcoin price action is technically that we're just trending upwards. And it's just showing a lot of strength and it's just flipping levels, which means that as long as Bitcoin stays above 98K on the short time frames, it is very likely that we're going to continue. But the moment that we lose such an important level and reverse back down, it seems very likely that we're going to have any of these 2 points of interest to look at from a perspective of longing into swing trades or investments or anything like that. And you can see that the current price action is very comparable to the price action that we saw during the period of 2023, where we were also grinding upwards, taking liquidity and just continue to push higher and push higher and push higher. And at this point, it's very likely that Bitcoin is just doing the exact same thing as here, where we just need to get some more momentum. We need to build up the actual breakout and we need to build up before we're going to expand the price action of Bitcoin to anything in the ballpark of, let's say, 150K. So it's very likely that Bitcoin in the short term isn't going to go vertical. Maybe we see 110K and then have a correction like we've seen here, where we reach 90K, maybe a little bit less. And from there, we start to continue rolling upwards. And in that window, it is very likely that Ethereum and the altcoins are going to outperform Bitcoin significantly. So when we look at Ethereum against USDT, for instance, we can technically see that we're currently facing the final resistance zone. And if Ethereum breaks through $4,000, that is going to be the moment where we are likely going to see that run towards an all-time high. And from a lower time frame perspective, if we get a correction towards 3.3K-ish, that will be great for entries. I'm not sure whether we're going to get it, but that would be great. Now, the important parts are the following, which is Ethereum against Bitcoin, which basically is making this bullish divergence and is currently at a resistance zone where I suspect that we've had the first test of that resistance, a very normal correction taking place. We're just consolidating, and I suspect that before the year is going to end, Ethereum breaks through 0.04 and it starts to rally upwards. And that is in line with the fact that Bitcoin is going to consolidate. So if you look at these charts, then you can see that Ethereum just reversed from a downwards trend, which has been happening for 3 years. It has been hitting the first resistance point. It has retested it here. And the next test is likely going to give that breakout of Ethereum to go higher, which is in line with the total tree chart, which I usually reverse or like mention on social media, where you can see that we have the longest bullish divergence since its existence, signaling that we're going to have a continued bull market for altcoins. So rather saying something that we are at the end of the cycle, we are at the start of the altcoin cycle, and there's still way more to come for the markets rather than having a continuation of the bear market. This is what I call the bear market PTSD, where people with every correction that takes place are expecting the markets to go lower. And I think that we're just resetting, liquidating all the leverage positions, making a higher low, and continue to move from there. And once we start to look at altcoins, then there are a few important charts that we need to look at, which is Aave, for instance, that has been constantly retesting levels in which it is currently rallying substantially high, in the sense that we have been seeing this move upwards due to the fact that Donald Trump, his foundation has been buying Aave. But from a higher time frame perspective, I wouldn't be interested into buying Aave here. And the chart is basically telling me that every correction is taking place, which is around 20% or more, that during those periods, I'd rather want to get myself positioned. So if we get into the region of around $280, that would be the area that I'll be buying into Aave, which is comparable to the chart that we have on Chainlink, which is currently making its run. But we see that we had a beautiful retest taking place around $19.50. So it's very likely that if Chainlink is going to make another 20% pullback, that is where I want to get into this actual position, which is also why I said for XRP that you need to wait it out before you want to get yourself into something, especially if it goes super vertical. So if something goes super vertical, you need to zoom out and take higher time frame levels that are very obvious and start trading from those ones. And in this case, I marked the area around $1.80, which we hit. And from there, we've seen a 25% bounce. So that is great for day trading purposes. If you're looking for long-term investments for XRP, I think you need to look at a lower valuation and also a longer period of consolidation before you want to get yourself positioned. Now, going back to the title, I want to use optimism once again, which at this point, we are making a massive bullish divergence. We have seen a substantial correction, but it's still down 74% from the high in the beginning of 2024, which means going back to that level is a 4x from here. And the question of where are we in the market cycle is then already answered. We are at the start of the Ethereum bull cycle. If optimism against Bitcoin breaks through 3,000 sats, if that happens, we are going to see a continuation towards the high that we've seen here. So compared with the fact that we have that bullish divergence and that we are in an accumulation period, this is still the period where you want to get yourself positioned into most of the altcoins, not XRP, not XLM, probably not Cardano, but in things like optimism and things like the smaller coins, which I often discuss, where I think that we are on edge of having that big run that is going to happen in the first period of 2025. Then the question is, what am I doing with my portfolio? And I've got my altcoin portfolio, those altcoins, these 8 ones that I have in my portfolio, which we have discussed in the previous video. And then I've also got more skin in the game because I'm having a venture capital in which I've got positions as well. And on the side, I'm trading volatility, becoming more active in the markets. Now, I said on the previous videos that these corrections are not the ones that I'm going to do much with it, as I still expect the upside to be way bigger than the downside. So I stick with my current positions. I'm going to take profits at some point, swapping that into my base asset Ethereum or into my base asset Bitcoin, depending on how fast the markets are going to move. And I'm going to rotate towards the next narrative, as very likely we are going to have seasons of narratives taking place, where right now Ethereum and DeFi starts to wake up. Once that one started to run, likely Solana is going to pick up momentum again, or Deepin, or any other narrative that we have. Currently we have RWA doing really great. Next one might be AI again. So I'm holding my positions. I'm going to take profits, which we discussed on these videos. And the further we get into the cycle, the more actively I'm going to be trading. So I'm trading volatility, which is going really well. And I'm also going to be trading, day trading, with things like XRP that I'm buying specific levels for a bounce, or breakout trading. If you would like me to make some videos on this particular aspect, make sure to comment beneath. But the further you get into the cycle, the shorter your time frame should be, the lower your actual take profit level should be, because the risks have simply increased. And at this point in time, I'm super happy by staying in my positions. Thank you very much for watching to this update. Next week, we're going to make a new altcoin portfolio update and a weekly update. Make sure to subscribe beneath, and I'll see you again. Ciao.